This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asia stocks are set for gains after dip buying turns around a slide on Wall Street. The S&P 500 closing on the brink of a bull market as investors shrug off that Moody's US downgrade. Australia's central bank set to cut rates today for a second time this year while remaining cautious on the policy path ahead. Also ahead, President Trump says Russia and Ukraine will begin immediate ceasefire talks after his phone call with Vladimir Putin.
And I'm Yvonne Mann, live from the Hong Kong Stock Exchange, where Chinese EV battery giant CATL is set to make its trading debut here in the world's largest listing this year. Shares already higher in the grey market.
A big one to watch out for, but in the meantime, let's get you straight to how we're setting up when it comes to this Tuesday morning here in Asia. Take a look at US futures trading at the moment. We spoke about that turnaround as sort of markets really looking for a semblance of good news despite these concerns over that US downgrade. We're looking like Asia will set up quite nicely as traders kind of shrugged off that risk. S&P futures at the moment looking pretty flat at the moment, as are tech futures there with the Nasdaq down by just about 0.1%. Watching oil prices as well. We're sort of trading sideways at the moment, but we did manage to end that previous session higher. A lot of volatility coming through from the geopolitical headlines, Avril, too, with these talks of the Ukraine ceasefire and where we might go from here.
Yeah, massive uncertainty still, even though there seems to be some progress on that front. But take a look at how we're shaping up when it comes to Australia futures. Maybe see that uptick. Of course, it's about RBA watch. 25 basis points in cuts are expected. This would be for the second time this year. And in terms of A50 futures, remember just a day ago in China, we saw that big miss when it came to retail sales numbers. Even though factory output was a nice beat, the attention now shifts to the loan prime rate announcement in a couple of hours from now. China is expected to follow the 7-day reverse repo track lower by 10 basis points. We also have a number of Chinese banks that have already cut their deposit rates from today. So certainly a lot in the way to keep an eye on for the whole of trading on Tuesday, Heidi.
Yeah, and we're being very watchful when it comes to geopolitical developments too, right? President Trump saying that Russia and Ukraine will begin talks immediately on ending their war after a 2-hour phone call with Vladimir Putin. But Trump denies that the US is stepping back from the peace talks after little signs that he's putting any pressure on the Russian leader.
On your call with President Putin today,
yeah,
you'd mentioned that the Pope would like to take a role potentially in mediating these talks. Does that mean that the US is taking a step back from...
No. I think it would be great to have it at the Vatican. Maybe it would have some extra significance.
Let's bring Bloomberg's Michael Heath. And look, you might be denying it, but certainly you've got world leaders, in particular European leaders, that are quite disappointed of this kind of disengaged mood from the US.
Yeah, look, I mean, everything President Trump has said about what will happen between Russia and Ukraine hasn't happened. I mean, whether it was he can solve it in a day, whether it can be solved in 100 days, that they would put more sanctions on Russia, that the US still will be part of it, all of that has sort of gone out the window. And you saw again President Trump sort of putting a positive spin on this conversation, but all it is it's direct negotiations between Russia, the aggressor, and Ukraine, which is the smaller country and has been sort of fighting for its life. And it's an imbalance there, and President Trump seems to be leaving it in that sort of imbalance. I mean, Russia says that it needs to, the underlying causes of this conflict need to be addressed, and those underlying causes really are Russian imperialism. So it's very difficult to see without a third party how, in any sustainable way, this is resolved other than a complete Russian victory.
Mike, can you talk us through also some of the nuances when it relates to this sort of change in stance from Trump? Because there was so much optimism, especially from European leaders, that they would take a bit of a bigger step when it comes to mediating between Russia and Ukraine.
Yeah, look, I mean, in a sense, what's happened is that the US is not prepared to apply any pressure to Russia. I mean, Senator Lindsey Graham, who's an ally of President Trump, has a package of significant sanctions that the US is prepared to deploy against Russia. There was no mention of that. There's no talk of a truce or a ceasefire here. And at the end of the day, the only country that can keep Ukraine in the fight is the US. I mean, for all the goodwill from Europe, France, Germany, Poland, the UK, which are sort of the chief countries that are backing Ukraine, they don't have the weapons, they don't have the firepower here to sustain Ukraine. And estimates are that Ukraine could probably go 3 or 4 months if the US cuts off if it gets no more supplies from the US. And it just, the underlying nature here is that Russia and President Vladimir Putin particularly, we've seen him for 25 years. There's nothing particularly new in what he does. He responds to power. And power involves, the US being there, or the option of NATO membership for Ukraine, or something like that to protect it. Either way, Russia will end up, in the current situation, unless we see something different, this will be a frozen conflict, and Russia will have some form of control.
The disengagement when it comes to the Middle East has been interesting too, when it comes to Israel and Gaza. We're now hearing that Israel wants to take over the area and restart aid, which has been halted for almost 3 months now. Yeah, I mean, look, Israel has been coming under pretty serious pressure for the restrictions on aid into the region, which is obviously, in a catastrophic state. But we're also seeing Israel basically reviving the conflict in many respects, and so the resumption of aid is to try to sort of stave off the international criticism. Basically, Israel is again trying to use its military to force Hamas to agree to terms, which is the release of the hostages, the remaining hostages, and for Hamas to disarm and go into exile, which Hamas has said that it's prepared to hand over power, but it won't disarm. So again, it's not a very good state in the world at the moment with that conflict restarting. Bloomberg's Michael Heath there with the latest. Let's bring in our Garfield Reynolds, who leads our Markets Live Asia coverage. And at the same time, we're seeing quite a lot of consternation in US markets. It's interesting though, we see both stocks and treasuries kind of following this pattern of where, there's a sell-off, there's genuine fundamental concerns. This time it's the ratings issue, but then kind of crawling back into the action.
Well, I'm racing back to some extent. Yesterday we were talking about the Sell America trade being revived, and it's become a bit of a trope where the Sell America trade is something that happens while America is sleeping, and then US investors, especially some particular groups of retail investors, they buy the dip that's been created. So that's again the situation, and by now, in the wake of the extraordinary comebacks for both bonds and stocks after the early April meltdowns following reciprocal tariffs, you've effectively got a Pavlovian response that when there's a dip, you have to buy it. So that's likely to go on being the response unless and until you get either the dips vanish because everything just keeps on going up, or more likely until you get another serious meltdown, and this time you don't get a rebound because that would involve the actual damage from the tariffs to the US economy playing out, rather than we had equities and bond markets looking to price in the damage that was anticipated by reciprocal tariffs that were in many cases the worst possible scenario, or even worse than most people had priced as being a possible scenario. So that was pricing in the impact that was going to come if those were sustained. Now we've had all of that pricing removed, despite the fact that we do have the highest tariffs since the 1940s, if you look at the average effective tariff rate. So those are going to have an impact, but the impacts are uncertain, and for now, that buy the dip response is ingrained.
Garth, is there a sense of complacency when you look at stocks, when you look at bonds even? I mean, we have the likes of Jamie Dimon just saying that, there's still this slew of risk, whether you're talking geopolitics or inflation. Yeah,
Jamie Dimon is not the first and won't be the last to point to a level of complacency. I mean, part of that complacency is that precisely over the last year or so, we've had the surprising resilience of the US economy. That's a theme that's had legs for many a month. If you think that we had the most extreme tightening cycle for 30, 40 years, and ultimately the US economy didn't go into recession, despite a lot of expectations. I was one of those who expected that sort of policy action was going to have the impact in the real world that you would have the US falling into recession. That didn't occur for a whole range of reasons, but the modus operandi now for markets is that we're not going to expect a recession until probably after it arrives. So that is, by definition, a complacent setup. The whole question is whether or not that complacency proves to be misguided or not. And for now, the jury is very much out on that. I do think it's significant that the markets are hesitating around the levels that they are now. There seems to be a lack of a trigger for a serious, sustainable rally from here. We're sort of dithering around, waiting to see what happens.
Yeah, Garth. There also seems to be quite remarkable, right? The sense of resilience we're seeing across markets still. Garfield Reynolds, thanks so much. Garfield Reynolds leads our Markets Live Asia coverage. And of course, markets have also been kind of preoccupied by the sense of fiscal discipline in the US, or the lack of it. And President Trump is planning to go to the Capitol on Tuesday to urge House Republicans to unite behind his tax cut legislation. House Speaker Mike Johnson is seeking to meet a self-imposed deadline of passing the package through the House this week. Bloomberg editor John Haney joins us for more from Washington. So, John, what's been holding up the agreement until now?
These disagreements really reflect not only divisions in the Republican Party, but in the country at large over the role of government, how much government should spend. The big issues that Mr. Trump is going to try to resolve tomorrow when he goes to the Capitol are Medicaid, the program, the health insurance program for the poor and children, how much to cut it and when, and the state and local tax deductions. Republicans in high tax states like California and New York, New Jersey, want the cap that was imposed when President Trump's original tax overhaul was passed back in 2017 to be raised. And even though Mike Johnson has offered up to $30,000 cap, that's not enough for some of these Republicans. Now, all this unfolds as yet another election draws near. That's the 2026 midterms, in which all the House members will be up for will be facing the voters, and 33 senators.
It's crazy that we're already looking to April 2026 as sort of, the jostling before midterms already begins, right, John? What does the infighting that we've seen, at times quite embarrassing for President Trump's own party, tell us about the state of support that he has internally at the moment, not just for this bill, but perhaps more broadly?
Well, he certainly still has broad support within his party and among his voters as well, I should say. Yet there is a question of just how much, as we've seen with the Ukraine-Russia war, just how much his involvement can accomplish. Now, it seems as if this tax package looks like it can be resolved, certainly. And as you point out, Mike Johnson, the House Speaker, has set this deadline for this Friday before the Memorial Day recess. They're really they're working very hard to bring this to conclusion. Last week, the Budget Committee rejected or voted against the tax plan, and then lo and behold, on Sunday, it was passed. Although the four Republicans who were very much against any spending, any more spending, and want Medicaid cuts, voted to abstain.
John, thanks so much for keeping track on those developments for us, Bloomberg editor John Hani. Now, the other thing that we're watching for today is CATL set to start trading in Hong Kong in a few hours after raising $4.6 billion in its IPO, the biggest in the world so far this year. The Chinese battery maker commands more than 35% of global market share, supplying car makers from domestic brands to Mercedes-Benz, Honda, Tesla. The China Show co-anchor Yvonne Man is live for us at the Hong Kong Exchange. Yvonne, what's in store today?
Yeah, you mentioned how things are doing. There's a lot of interest in this stock, particularly when we saw in the gray market. Shares already rising. We heard that this stock was also heavily oversubscribed leading up to today. So when you take a look at how the shares were priced at 263 Hong Kong dollars a pop, that's only about a 7% discount from the Shenzhen listed shares last close, which is quite rare. That A8 share premium usually is about 25% if you look at past secondary listings like Medea Group, China Tourism Group, for example. So strong demand heading into today, and it seems like foreign investors, they are leaning into this whole story, a global story of China dominating when it comes to EV supply chain manufacturing over some of these U.S.-China trade concerns. You mentioned about the superlatives, right? They are the champion of the EV battery market. They have top-tier customer base, and the technological innovation is there.
There's the overlay of geopolitics, right? How worried should investors be about US-China tensions?
Yeah, leading up to this listing was already filled with hurdles, right? You talk about, the CATL excluding these onshore U.S. institutions from taking part of this deal in order to limit and reduce their U.S. exposure. That was already one thing. But then again, you take a look at what the underwriters of this deal, U.S. banks like J.P. Morgan, Bank of America, who were sponsoring this deal, they were urged by U.S. congressional lawmakers to drop out of this IPO. They decided to not do that and stuck to this deal. But just goes to show how they are being enthralled in this U.S.-China trade debate. Despite that, though, it's interesting, right? If they do well, Bloomberg Economics has a very interesting take on this. That means that Chinese companies can actually tap into global capital, raise a significant amount of funds without the support of U.S. investors. That certainly is what the founder, Robin Zhang, wants here, with these proceeds being put into international expansion, particularly when it comes to Europe.
Yvonne, it's also a big day for the Hong Kong Exchange. Should we be expecting other Chinese companies to kind of follow suit?
Well, we've talked about years of the Hong Kong Exchange really been reeling from the lack of IPO appetite. But no, this listing, a secondary one for CATL, does put Hong Kong Exchange back on the map in some ways. Single-handedly, it doubles the amount of proceeds that Hong Kong listings have raised this year. And certainly it's going to be a good day for Bonnie Chan and her team at Hong Kong Exchange. And also when it comes to the appetite and optimism around the tech sector, right? The fact that this secondary listing went through did go probably getting the approval of Beijing. So what does that mean? Does that mean that the relationship between Xi's administration and the private sector is improving? Maybe we're seeing a restoration of those relations when they really do rely on the entrepreneurs and the private sector to shore up growth now.
Indeed, the Chinese authorities' support for the private sector, something we've been watching closely. Yvonne Man for us there. And also coming up on the Asia trade, we're talking AI, robotics, chips with IDC Group. We'll get market insights with MNG. Plus, more on CATL's Hong Kong trading debut with Macquarie Capital. This is Bloomberg.
Australia's central bank is expected to lower interest rates for a second time this year due to easing price pressures and a pause in US-China trade tensions. However, it is expected to be a hawkish cut, and Asia-Pacific economy reporter Spuddy Pandy joins us now for more on that. So there are reasons, as always, it seems, with the RBA on either side. Some of the labour market data has been quite interesting, and the pressure seems off when it comes to China.
That's right. When the year started, it felt like the labor market is loosening, but data in the past 2 months have proven to be pretty strong. In fact, the price gauges that the RBA looks at, inflation and wages, have both been stronger than expected. And yes, I mean, even though the uncertainty has eased, there is still uncertainty. We never know what happens after the 90-day pause ends. So the RBA does need to be cautious or careful about all of those scenarios as well.
So what are we expecting from the governor from the press conference to maybe provide that maximum optionality going forward amid this uncertainty?
Yes, Micaela Bullock has become really good at expressing herself at the press conference, discussing what happened inside the board meeting, and really telling people, individuals, households, explaining monetary policy to them and telling them why the RBA is doing what it's doing. And today, if they do decide to cut interest rates, and Micaela Bullock, I believe, would try and send this message to households and businesses to not expect any further cuts from here. There may be or may not be, but they have been really careful about providing forward guidance, and that is going to be the case even today.
How much of this is sort of a Goldilocks situation, and how much kind of does it mask maybe the bigger structural issues with the economy? Obviously, productivity across all sectors is going to be a key focus for the government's now stronger mandate.
Yes, it does mask some of those problems, as you pointed out, Heidi. I mean, we are in a good situation, right? Like, labor market is pretty strong. Inflation is inside the RBA's target band. In fact, when I spoke with Warwick McKibben, who used to be on the RBA's board, he was saying the RBA should not be cutting interest rates. He reckons the neutral, we are already at neutral, and given the low productivity that we have in the economy, we should try and keep interest rates where they are, and the government should in fact take the burden of reviving the economy and putting money where it really needs to be.
Bloomberg's Haidi Pandey there ahead of that RBA decision. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching when it comes to US Treasury futures there, which was quite a wild ride given the sell-off that we saw on Monday in the wake of the ratings concerns. Moody's sharpening its focus on US debt, and we saw that fall in US assets, including Treasuries and the dollar, but that really saw a pretty rapid turnaround as we saw sort of domestic buyers coming back into the fray. We're also seeing Aussie 10-year bond futures seeing potentially a knee-jerk pop higher on if we do get that rate cut through today by the RBA, really seen as a hawkish cut or potentially a protective cut that we see from the Reserve Bank of Australia. That is unlikely to be sustained as we see Treasuries kind of still remaining ultimately in that bear market despite the recovery from the deep sell-off that we saw on Monday. And as we head towards that RBA decision, watching those bond markets with the Reserve Bank seen to lower to 3.35% by the end of the year. Much more ahead on the Asia trade. This is Bloomberg. It is day 2 of Computex, Asia's biggest electronics forum. Day 1 had big announcements from Nvidia chief Jensen Huang, who announced plans to let customers deploy rival chips in data centers. Let's get across to Bloomberg's Avril Jewelers for the latest out of Taipei. But we also heard from Intel's Lip-Bu Tan. Give us the latest in terms of what we're hearing from these industry leaders.
Yeah, as you said, yesterday was the sort of the kickoff of Computex for this year, and it was when we had a lot of keynotes from the likes of Nvidia, for instance, Qualcomm, Honhai, MediaTek, just some of the names. Today it's more of the focus on the exhibitions, and here we are at the venue, but we're going to see lots of people coming through these doors in the coming hours. The focus on Intel as well, this was really interesting to note because Intel actually isn't here to give any keynotes this year. It is, though, the chance to hear from the new CEO, Lip-Bu Tan. So last night there was an event where Lip-Bu Tan was speaking directly with some of the big customers and clients of the business. He certainly has some major challenges ahead, and in his speech he was really talking about those challenges as well and saying that he had been listening to some of the feedback. He really played up the role of Intel in the Taiwan ecosystem and really stressed those partnerships too. So that was, again, a bit of a departure from the past because the former CEO, Pat Gelsinger, was someone who'd been quite critical of TSMC in particular. Also to note yesterday, which came late in the day, was Hon Hai's filing to the Taiwan Stock Exchange. So they're actually investing a further $1.5 billion into their India unit, and that's notable because we know that Apple is planning to manufacture most of the iPhones that it sells in the US by the end of next year in India, and that's despite President Trump as well really pushing Apple not to do that, but Hon Hai does appear to be pushing ahead with it.
Yeah, Belle, amid all these shifting supply chains, we're also keeping tabs on what's happening outside Computex, and we have reports that Xiaomi aims to spend billions to build its own chips.
Yeah, that's right. So this is an effort that Xiaomi is making here to really be able to develop its own smartphone processors in-house. And so we got an update on the timing of that. They're saying that they're going to be able to unveil their first self-designed processor by May. So really just in the coming days, but it's going to be made with 3 nanometer technology. So we heard from Lei Jun, this is the founder and chairman of the business, talking directly to people on social media about this. It's an effort that is going to be costing them a lot, really, but nearly $7 billion, so 50 billion yuan that they're putting into this effort. They're saying they've been working on it for several years now. Very interesting to note, of course, because it is sort of the process or the approach, for instance, that Apple has taken, moving away from Qualcomm processors, but now Xiaomi trying to also bring that in-house.
We're also seeing something of a milestone from Huawei.
Yeah, that's right. So Huawei has unveiled that it's got a new operating system for its Mate PC or its folding laptop. So this again is sort of a departure from what we've seen in the past. Huawei is essentially phasing out the Windows operating system for its range of different PC products, and so this is the latest on that, but bringing Harmony, that's what it's called, and it's already been using that for smartphones, but they're saying now it's going to be compatible for PCs and also making it compatible for more than 2,000 apps, including WeChat. So again, it's this sort of departure we're seeing where Huawei, very strong in hardware, now moving into software, and China generally focused on building more self-reliance and resiliency in the ecosystem and shifting away from US products.
Bloomberg's Annabelle Jewell is there. Another story that we're following, China is accusing Washington of undermining recent trade talks with its warning that using Huawei's AI chips anywhere in the world would violate US export controls. The Commerce Department had issued the statement last week, while the US has since toned down that language, stripping away the anywhere in the world reference. It hasn't appeased Beijing, Avril.
Yeah, it's really this focus on tech that we're seeing today as well. And later from Computex, IDC Group Vice President Mario Morales joins us to talk AI, his outlook for the chips industry as well, amid the uncertainties surrounding US policy. But first, the latest from the corporate front. Hong Kong issuer FWD has filed a fresh application for an IPO in the city as share sales pick up again. The firm is reportedly seeking to raise several $100 million from a listing this year. FWD is backed by billionaire Richard Lee and had dropped previous attempts for much bigger listings in both Hong Kong and New York as far back as 2021. Trip.com has reported first quarter adjusted earnings per American depository receipts that beat estimates. Revenue came in at 13.8 billion yuan, while gross profit was around 11 billion yuan. Executive Chairman James Liang says the industry maintained strong momentum in the first quarter of the year, supported by consumer demand and favorable travel policies. UBS said to be set for defeat in its first efforts to water down a Swiss law raising its capital demands. Sources say the proposed bill would force the lender to boost its ability to cover losses at foreign units to 100% of their capital. That would mean as much as $25 billion in extra capital. UBS is pushing against the new rule, arguing it would be a major disadvantage. Haidi?
Avril, take a look at how we're setting up in Asia as we expect to see some of the tailwinds that we had from the US, the ultimate sort of bounce back in that rally overnight to pass through to this part of the session. For Australia, it is all about potentially that protective or hawkish RBA rate cut that is expected today, despite, of course, some mixed signals when it comes to the broader economy. The US-China trade reprieve perhaps complicating matters in terms of what that means for inflation and what that means for broader growth as a sort of China proxy that we see here in Australia. S&P futures, SPI futures, I should say, when it comes to Sydney, looking higher by about 0.9%, looking like an early gain of about 0.8%. So potentially a seventh straight day of gains for the US, leading through to Sydney here as well. Singapore Nikkei futures also looking pretty solid at this point, and S&P futures up by about 0.1% after 6 days of gains. Atlanta Fed President Raphael Bostic is adopting a wait-and-see approach when it comes to rates there, citing uncertainty over ongoing trade negotiations. He knows more about the trade tariff uncertainty influencing policymakers and investors.
The market is trying to process a lot at this point, and where our rates are, I think, are mildly restrictive in the marketplace, trying to get inflation back to our 2% target because it's been too high for too long. I think the rest of it is really about perceptions of risk in the marketplace and uncertainty and the volatility that might be present in the market, I think leads to there being an extra premium on it. And so the market will decide what its price needs to be, but it doesn't surprise me very much that we see it at a higher level relative to the things that we've done with our rate in the last year.
Well, we've got the downgrade now that pushed rates up early this morning and overnight, and then it started to fade back a bit. The same thing that sort of happened after Fitch and S&P did their downgrades. Does it worry you that they are not pricing in more of credit risk to the United States, given that we're no longer AAA?
Well, you'll have to talk to the raters about sort of how they interpret these things. What I would say is this, so much of our economy is based on faith that we will deliver on the things that we say that we've promised for the future. When you start to see the markets waver a little bit, I think people are asking the question, do we still have that same level of faith? I think the sign that rates have started to come back down and the markets are sort of returning back to a normal stasis suggests that they think there is that likelihood moving forward, and we'll just have to see where it goes. I mean, I always want to make sure I understand what the price of credit and debt is, but the markets will make a determination of that on their own.
Well, if they are higher and stay higher as they are right now, does that affect your calculation of what you have to do?
Well, it depends. One of the things that will be interesting to see is how businesses and consumers respond to the environment. What I'll say is, because of the word that you said at the very beginning, uncertainty, we know that many businesses and many families are really holding tight to see sort of how this all sorts out. And we'll just have to see how the changes in pricing in bond markets and other markets translates into different strategies moving forward. I do think the stasis that we have right now is one reason why I think it's appropriate for us to be waiting on our policy as well. And we'll just have to see how this all plays out. I'm hopeful that as we get through the summer, we start to get more clarity on exactly where things are going to settle out in trade policy and other factors.
Atlanta Fed President Raphael Bostic speaking with Bloomberg's Michael McKee. Time for morning calls ahead of the Asia trading day. And in spite of some of these uncertainties, Morgan Stanley's Michael Wilson says investors should buy any dips in U.S. stocks fueled by Moody's U.S. downgrade. Wilson says the trade truce with China has reduced the chances of recession, and the corporate earnings season seems to have ended with no major impact from the uncertainty over tariffs. He adds that the recent pickup in profit upgrades also bodes well for further equity gains. JP Morgan CEO Jamie Dimon warning against complacency, though, in the face of various risks, including inflation, credit spreads, and geopolitics. And speaking at the bank's Investor Day, Dimon said he's concerned about elevated inflation and stagflation and high asset prices. He added that credit spreads are not accounting for potential downturn impacts.
Personally, and I don't like making forecasts, stuff like that. I am not a buyer of credit today. Okay, I think credit today is a bad risk. I think that people who haven't been through major downturns are missing the point about what can happen in credit.
And a reminder that later this week, Bloomberg will be speaking exclusively to Jamie Dimon from the bank's Global China Summit. Tune in for that conversation at the times on your screens. More ahead on the Asia trade. This is Bloomberg. More now from Computex in Taipei, where Nvidia CEO Jensen Huang has made a splash at the event, announcing plans to let customers deploy rival chips in data centers built with his company's technology. Let's get back to Annabelle, who's standing by with our next guest.
Thanks, Avril. Yeah, I'm joined this morning by Mario Morales, Vice President Enabling Technologies and Semiconductors at IDC Group, joining us this morning. So thanks very much for making the time.
Thank you very much.
I want to start with the keynotes that we heard yesterday. So it was really the chance for a lot of people here to be hearing directly from Nvidia, for instance, Qualcomm, Honhai, MediaTek, lots of different names. Okay, maybe we're missing some of the ones in the past, like AMD, for instance, or Intel. But which announcements stood out to you in particular?
I think the fact that we're still in the middle of a $1 trillion transformation, I think Nvidia brought that up, and they talked about the fact that they're seeing $5 trillion worth of investment in the coming years in AI infrastructure. I think that's a massive amount of investment and potential growth for the entire ecosystem. So that stood out to me. I think the NVLink Fusion announcement by Nvidia was also very interesting because for a while now, Nvidia has been proprietary with its technology, its GPU and interconnect technology, its networking technology. But now, because customers are pushing them towards more open, an open approach, you're seeing some of their products now invite third parties to participate and collaborate with them inside of the Nvidia ecosystem. So I thought that was important. We're also seeing a big refresh of PCs. I think we're due a very big upgrade cycle in the enterprise space for both PCs and servers. And so many of these companies are getting ready for that, despite some of the geopolitical or macroeconomic uncertainty. We still are very optimistic that we're going to see dramatic growth in the enterprise. And so companies are refreshing their product lines to get ready for that.
This year was really about the move to the edge and this that we were going to see AI being implanted directly into devices, but it seems to be happening maybe a little bit slower than some had anticipated.
Yeah, I think it takes time, right? I think most of the growth that we've seen in AI has been primarily in infrastructure because we're doing a lot of training and a lot of the large language models are being developed to this day now, and we're seeing new models form every single day. Eventually, what we're going to see is AI is going to move to the edge, and you're going to see inferencing and reasoning happening at the edge, and that's just we're just at the beginning of that. I think the inflection point will probably happen in the next couple of years. And keep in mind, there are billions of devices out there that are becoming more intelligent. They'll have AI capabilities infused into these devices, and they just need the content. They need the data to be able to take advantage of that data that exists that we create every single day as consumers.
What are you hearing about the demand for AI servers? Because again, there were concerns maybe we'd sort of hit over capacity and there wouldn't be such a need moving forward. And at the same time, you know, that DeepSeek effect, if it's still playing out, what are you hearing from people that you speak with?
We have still not yet seen a slowdown. I think there was some pause when we saw the U.S. administration issue the initial messaging around tariffs. But once that started subsiding, we started seeing again the demand continue. So we're still very optimistic that we're going to continue to see pretty rapid growth in the build-up of AI infrastructure. I mean, most of it today has been happening with cloud service providers, but IDC believes that in the next 3 years, we're going to see $1.5 trillion of ITC spending And of that, about 325 billion worth of spending will be for AI platforms. So there's still a lot of investment to be made. And I think a lot of that happens over the next 5 to 6 years.
We were just talking earlier on TV about Lip-Bu Tan speaking last night at an Intel event. It's not an official keynote because they're not here in that sort of capacity this year, but certainly Lip-Bu Tan from Intel is talking about the challenges that are facing the business and stressing that role that it has and the relationships it has in the Taiwan ecosystem. Is that the right approach? And how much patience do you think there's going to be as well with this turnaround strategy?
Well, I think Intel has a lot of legacy in Taiwan. Many of the companies, whether it's Foxconn or Compal or Windstrom, all of these companies have grown up with Intel. Intel was very early on in seeding a lot of these companies in the PC ecosystem and also in the server ecosystem. And today, these companies are all giants and have grown up because of Intel's technology. I think Intel now is caught in a very challenging time because the markets are moving faster than their ability to execute. So Lip-Bu has a tough challenge ahead. They're still, I consider them still a leader in the space, but they're not at the table today in AI just because they don't have the product roadmap today, but they're working on those things. I think on the PC client side, they're a lot more competitive. I think they had missed a couple steps there, but with Lunar Lake, Panther Lake is coming. These are architectures that are going to be very important for AI PCs. They will be in the game, and it's more about not only continuing to maintain their market position as they continue to transform as a company, but it will take time. I think the biggest challenge for them will be more on the manufacturing side of things because TSMC is the global leader in this space and they're years ahead of everybody else. And so Intel will need time to catch up.
Just briefly, as I said, Intel's not here in a keynote capacity this year. AMD's not here either. What does that tell you? Okay, yeah, maybe the ecosystem is really still very Taiwan focused, but what does that tell you as well in a time of rising tensions between the US and China and that pressure on Taiwanese companies to shift production abroad?
Yeah, I think there's definitely continuing to be a lot of geopolitical pressure just overall for every company. There are growing potential costs as well with the tariff conversations that we've been having. But the ecosystem here in Taiwan is still intact. And even though they're outsourcing or moving to other regions, they have to because the customers that they serve are global customers and they need to provide and mitigate some of the potential future risks with any type of issues from a geopolitical standpoint. So I think Taiwan is an essential ingredient for all of the ecosystems that we're talking about. And when you think about the keynotes that we're seeing this week, whether it's Nvidia or Qualcomm, these are companies that are driving the faster growing segments of the market. So Nvidia has grown faster than anyone else, and today they are the largest semiconductor company in the world. They're the first company to achieve over $100 billion in revenue as a chip company, and that's unheard of. I think Intel was the one that came closest, but you're seeing sort of a changing of the guard, and I think that's what you're seeing also with the keynotes. So Qualcomm in the same position, diversifying its portfolio of customers. They've been very good at execution, but they also have to find markets for more growth, and that's why Qualcomm announced that they're getting into the data center space as well.
All right, Mario, thanks so much for your time this morning. That was Mario Morales, their Vice President for Enabling Technologies and Semiconductors at IDC Group. Avril.
I'll take it from here, Belle. Our tech reporter, Avril Jewellers, there in Taipei covering Computex for us. And we'll have more from the event in Taipei later today, speaking exclusively to the Advantech group about the path ahead for AI. That conversation happening at 10 a.m. Hong Kong time. More ahead here on the Asia Trade. This is Bloomberg.
You're watching the Asia Trade, and one of the companies we've been keeping a close watch on out of Japan, Nippon Steel, said to have bolstered its pledge to invest in U.S. steel in the event that President Trump approves its takeover bid. Steven Stepchinsky leads Bloomberg's Asia Energy team, and he joins me now in the Singapore studio. So, Steven, we're hearing that Nippon Steel is committing billions. Does this help to salvage the deal?
Well, I mean, I think you have to first look at what they're committing to, right? They're committing to build a new mill. They're committing to keep the jobs, and they're committing to potentially take in more unionized laborers. Now, they've kind of said stuff like this in the past. They've always kind of sweetened the pot. This is one more attempt by them to increase this investment to try to get Trump's approval. Trump loves big numbers. Now, I think what's interesting about this, in the story my colleagues from the U.S. Were writing, according to their sources, this was negotiated by the Trump administration. So Nippon Steel's indirect communications with Trump allies, with people in the White House potentially, to try to get this over the line. So clearly, this will most likely help, not hurt, their case going forward. But I think you also have to look at what Trump has said. Now, if you trust his past statements, he has consistently said over the last few months that U.S. Steel should not be foreign-owned, essentially, and Nippon Steel instead should just invest in the United States or build a new plant. So it's still quite unclear whether or not we're going to see any approval from the Trump administration.
Stephen, what are the next steps that we should be watching?
Well, I think the next thing to watch, besides just Trump's statements to the media in general over the next few weeks and months, is June. Early June, that's when the CFIUS review, that's the review as to whether or not Nippon Steel will be able to make an investment into U.S. Steel. Whether that will get approved or not. Now, this was famous. The CFIUS review under the Biden administration had suggested that there could be some problems, and that's why ultimately Biden rejected, in the very end of his administration, rejected that takeover. Now, the next thing is what will happen with Trump's review. We're going to have a clearer picture in June, and I think that's the date that everyone's really watching for.
Yeah, we'll be hyper-focused on that. Stephen Stupczynski, thanks for bringing us the latest. Bloomberg, Stephen Stupczynski there. Now, another stock we're watching in Japan when trading opens, Toyota Motors, Nikkei reporting that the group and other companies are considering borrowing up to $21 billion from financial institutions to help take Toyota Industries private, something we'll be watching when trading begins in the next hour. This is Trade. We're counting down to Asia's major market opens. And of course, Haidi, the one thing we've been watching was that reaction, somehow short-lived, to Moody's downgrading the U.S. credit rating.
Yeah, you saw that sort of typical pattern that we're starting to see play out when it comes to U.S. assets, right? Be it you talk about the dollar or treasuries or even U.S. equities where there's foreign selling overnight and then U.S. buyers come back online and we end up rallying. It's that rally that's expected to pass through to a pretty solid session here in Asia, one that which holds potentially that hawkish cut from the RBA.
Yep, 25 basis points. That seems to be what's in the works, but also keeping a close watch on the messaging that comes through from the governor eventually to keep that sort of maximum optionality for the uncertainties that could lie ahead for the rest of this year. And let's take a look at how Japan is faring at the start of trade as expected, given the handover that we saw from Wall Street, somehow shrugging off some of the market concerns. We're seeing that lead in the Japanese stocks higher by about 0.6 on both the Nikkei and the Topics. The Japanese bonds also seem to be tracking what we're seeing in U.S. Treasuries, a bit of that recovery. That being said, something that hasn't really bounced back as much is the declines that we're seeing in the dollar. Dollar-yen now still stable at around the 145 handle. Flip the board, take a look at the South Korean markets at the open. We're seeing still those gains on the Korean won, actually not by much. 13.89 is where we're seeing dollar Korean won. The gains quite pronounced on those stocks in South Korea, Haidi.
Take a look at how we're setting up on RBA decision day. Of course, as we mentioned, the expectations are for that sort of almost protective cut to come from the RBA today. It'll be very interesting to see what happens with the property market, given there has been this kind of pent-up expectation. Some things have changed when it comes to that sort of easing back of US-China trade measures, the implications on that for inflation, but also on the flip side for growth as well will be quite interesting to watch as well. Of course, there are all these underlying sort of structural issues with productivity in the US economy, in the Australian economy, I should say, that we'll be waiting to hear for commentary from the RBA, and also sort of their views as to just how robust really the labour market continues to be. We had blowout employment numbers just over the last week or so. We're seeing a little bit of a trickle up start when it comes to Aussie shares at the moment, that staggered session. Just a little bit of positivity. We're also seeing the Aussie dollar looking pretty flat at the moment, trading at 64.54. Treasuries was really kind of the interesting story that we saw out of the overnight session, as we as Avril mentioned, really that concern over the Moody's downgrade and the revision of US debt really seemed to be quite short-lived, despite an initial fall in treasuries as well as the dollar. The traders, though, really ultimately shrugging off that downgrade. The question is whether this pattern of kind of sell-off followed by recovery in US hours has that sort of robustness to be sustained from here on, Avril.
Yep, when it comes to stocks especially. So let's bring in our next guest, who remains constructive on Japan, China and India. With us now is Vikas Pershad, Asia Equities Portfolio Manager at MNG Investments. Vikas, great to have you. We're seeing that bounce back when it comes to US stocks to a certain extent in Asia as well. What do you make of this? Does this come as a sort of surprise to you, this kind of trading patterns?
Hi, good morning. It's wonderful to be here. Is it a surprise? Perhaps we shouldn't be surprised. I would say I was by the resilience of the US market overnight, which you were just discussing. That should carry through to Asia. But this is short term. The Moody's downgrade, many have highlighted, is backward looking. We look forward. We look several years out for our time horizons. And when we do that, we see a strong case for continued convergence between the US market and the rest of the world, with Asia in particular. And then within Asia, the three largest markets, Japan, where I am now, China, and in India.
Yeah, we want to talk a bit more about your Japan, China, India calls, but I just like your sense as well on, you look long-term horizon, but in the interim, like for the rest of the year, what are your, assessments of perhaps the US recession? We have all these finance industry leaders out of the US still saying, that's potentially their risk, there are uncertainties out there.
There are clear uncertainties, and there's a clear bridge between, in my answer, between the US and Asia, Japan in particular. I've only been here about a day and a half. I had a series of meetings yesterday with factory automation companies, semiconductor companies, in various parts of that supply chain. And the outlooks were, I would say, cautious to almost bleak in some cases for the near term being maybe the next 2 to 4 quarters. There's a lot of uncertainty. These sectors are highly exposed to the automotive sector. Because of the tariffs, there's heightened uncertainty there. Because of the higher recession risk now in the US than there was perhaps a year ago, there's heightened risk there. So the visibility is not clear. And yes, we are long-term investors, but we do pay very close attention to short-term data points. And for now, those data points are not looking great. But then we have to ask ourselves, what is in the price? And what we've seen is, in early April, a lot of bad news was in the price, clearly. And the pace of the recovery since then, actually, to me and to our team, has been surprising in some sectors. But there still remains a lot of value on the table for long-term investors in Asia, and in the three largest markets in particular.
Yeah, because if you talk about the dislocations, how much of that is still in place despite the market recovery, and where do you see, I guess, more idiosyncratic opportunities in these markets?
Yes, so if we start off in Japan, it's across the market cap curve, it's across sectors. The corporate governance transformation that's been underway for many years is only accelerating now. If you look at the year-to-date shareholder buyback figures that we've seen, completed in the March quarter, that continued into April, we have dwarfed the totals from last year, which were up substantially compared to several years ago. That will continue. That's very exciting. This is just the beginning. And that's not the only signal of corporate governance transformations underway. There's also the changes in the C-suites, the internationalization of boards and companies, the outbound M&A. There's inbound M&A as well. So there's a lot happening here in Japan. In China, the consumer sector is one that we continue to like. It's not just bubble tea, which we've been involved in, but more broadly, consumers spending in certain areas is very strong. And then in India, there continue to be a lot of long-term opportunities across sectors: healthcare services, real estate, auto parts, auto companies. Factory automation is picking up in India as well. The Make in India theme, defense. We continue to be overweight defense in India. That has served us well this year.
It's not just bubble tea. Is it bubble tea and labubu? Or what else are you looking at for China that perhaps we haven't been talking about?
Well, there's toys, there's the various retail formats, the internationalization of these concepts that are scaling very well in China, coffee as well. I should add to that. So food and beverage, consumer companies, but it's broader than that. I should also talk about China because this came up in every meeting I had yesterday when I was meeting factory automation companies and semiconductor companies. The margin differential and the subsidies and the level of support from the government in China is causing genuine issues. It's beyond nettlesome. It's causing genuine issues for companies in South Korea and in Japan that are in the semiconductor production equipment space, in semiconductor wafers, in robotics. And so those companies in China are continuing to get stronger, while in the short term, causing some weakness for companies in other parts of North Asia. So that's something that we're watching. It's a sector that we have been very overweight at times in the past 20 years in Korea and in Japan. But we're in an underweight position now, given what we're seeing.
Are you saying that when it comes to some of these Chinese investments, ultimately that will come at the expense of some of these other markets in North Asia that used to have dominance? How exactly are you going to play that?
Well, if you're asking about overall capital allocation to the largest three markets in Asia, we have allocated more to each of those markets this year and last year as well. But within that, the mix is changing. So, for example, in the semiconductor production equipment sector, for the past 10 years, there have been long stretches where we've been quite overweight this space. But when we look at growth, the exposure to China, the margin structure of Korean and Japanese companies compared to Chinese companies, some shift was necessary. And we've expressed that through underweight positions in the SPE sector, the semiconductor production equipment sector, here in Japan. And we are doing more work on the factory automation, robotics, SPE sectors in China.
Vikas, really great to have you with us. Vikas Pershad, Asian Equities Portfolio Manager at M&G Investments. Well, one event we're watching is CATL set to start trading in Hong Kong in just a few hours' time after raising $4.6 billion in its IPO, the biggest in the world so far this year. The Chinese battery maker commands over 35% of global market share, supplying car makers from domestic brands to Mercedes-Benz, Honda, Tesla among them. Our China show co-anchor Yvonne Mann is live on the ground for us at the Hong Kong Exchange. This is a big one. What's in store today, Yvonne?
Yep, and you're hearing the mic checks right now. They're saying testing, yeah, Samse, right? So we're about to hear from Robin Zhang, the founder of CATL, in just a few minutes before the shares start trading. But you talk about the highlights, right? I mean, this has been a big stock for Hong Kong and as well a big day for CATL. Heavily oversubscribed. We're talking about the shares did rise in the gray market. And the fact is that there are 263 Hong Kong dollars a pop for the shares. That's only about a 6 to 7% discount from the Shenzhen listed shares last trade. So that just goes to show there is no massive discount here. There's strong demand leading up to today. It seems like foreign investors are really leaning into this blue chip stock here and really focusing on what they dominate in, strategic technology in the EV battery manufacturing side of things here, and really kind of brushing aside the US-China trade concerns.
Yeah, I mean, on that note, Yvonne, how worried should investors be?
Well, certainly there's been a lot of hurdles, right? We talked about the Pentagon blacklist here, and where U.S. has basically alleged of security risks around this company, that CATL has links to the Chinese military. The company has denied it repeatedly. And then there's also just even the underwriters of this deal, the U.S. banks like JP Morgan, Bank of America. U.S. congressional lawmakers called them out, telling them to drop out of this IPO. They didn't listen and stuck to the deal, but just goes to show this company has been caught between the U.S. and China crosswinds here. And in terms of the global impact with tariffs and from the U.S., CATL says there's little impact so far, but ever more reason for this secondary listing for the founder, Robin Zhang. He has had his eyes on really tapping into global capital and really trying to use these proceeds for international expansion. $5 billion we're talking about, 50 billion, I should say, in revenue. Only 30% comes from outside of China. So that's where the potential lies. They have factories all over Europe when it comes to Germany, that 7 billion euro one in Hungary that they're developing as well. They're building out this EV material supply chain in Indonesia. So all these moves in some ways to avoid import tariffs and really tap into markets that are more profitable than in the mainland.
What are analysts saying about the stock?
Yeah, there's a lot of optimism, obviously, here. But we mentioned about the fact that Beijing gave the green light for the secondary listing to happen. Bloomberg Economics had a very interesting take on this, saying that this is a sign that Beijing and the Xi administration is warming up their relations with entrepreneurs once again since that failed IPO of Ant Financial back in 2020. So are we seeing a restoration of ties between the government and the private sector? Does that mean we could see more IPOs coming back here into Hong Kong? That certainly is the hope from Bonnie Chan and her team here at the Hong Kong Stock Exchange. But when it comes to the stock, we talked about just that small discount, right? But analysts are saying, look, that just goes to show there's a small slice of the pie that investors can get, right? 2/3 of the stock is being held by cornerstone investors who cannot sell the stock for at least 6 months. So there is that liquidity issue, but ever more reason they say it's a no-brainer for the stock. Jefferies in particular is saying at 17 times earnings, they're saying valuations are low compared to some of their rivals out there. Attractive earnings potential as well. The stock, Jefferies says, has room to rise some 50% from today.
Right, Yvonne, great stuff. Thanks so much, Yvonne Man, on a big day at the Hong Kong Exchange for us. And we have more later this hour on CATL's Hong Kong trading debut, the global outlook for EVs as well with Macquarie Capital. In the meantime, checking in on one stock that we've been closely watching, Toyota Group, Toyota Industries, I should say. We're seeing that massive surge, about 8%. And of course, this is against the backdrop of Toyota Group set to be eyeing a 3 trillion yen loan or loans for buyout proposals to go through. This is according to Nikkei reporting. And of course, other local media reports, including from Kyodo, also suggest that Toyota Industries is set to accept this buyout proposal. Of course, part of efforts to sort of streamline things when it comes to corporate developments in Japan. More ahead on the Asia trade. This is Bloomberg.
Well, President Trump says Russia and Ukraine will begin talks immediately on ending the war after his 2-hour phone call with Vladimir Putin.
This is not a war that would have happened if I were president. This is not my war. I'm just here to try and help.
For more, let's bring in Bloomberg's Michael Haidi. So this kind of goes to, this is not my war, right? This sort of goes to the concern that Trump on both Ukraine and Russia and Israel and Gaza has sort of disengaged somewhat.
Yeah, well, look, on Russia and Ukraine, he was never terribly engaged other than wanting to rebuild bridges with Russia, which he's always had this unusual sort of soft spot for Vladimir Putin. But yeah, we've sort of seen this Trump's rhetoric run into reality here. His "I'll stop it in a day, it'll be finished in 100 days." 11 days ago, we were talking about a ceasefire and potentially sanctions on Russia, and now we're talking about nothing. And this notion that the war wouldn't have happened if he was on there, it's sort of hard to take seriously, given that I mean, Russia has been, since Vladimir Putin has been in power, it's been trying to sort of recreate, if not the Soviet Union, then elements of the Russian Empire, and Ukraine is the largest and most important part of that. So, yeah, look, what we seem to be seeing is the US disengaging there. With Israel, it's sort of more interesting because Netanyahu and Trump sort of have always seemed to be quite close there, but there seems to be a degree of frustration and sort of understandably so in the White House that just this idea of trying to get the hostages out, of trying to bring this war to a conclusion, it's hard to see how the Israeli government is helping that, because obviously Prime Minister Netanyahu relies on very hawkish members of the political lawmakers there to maintain power, and so he's sort of committed to keeping up this effort to destroy Hamas, which obviously leaves the hostages in limbo too. So, yeah, I mean, on Ukraine and Russia, it's it's a pretty sad situation there. On Israel, I think Trump is sort of going with the global flow too. There's a lot of frustration internationally with Prime Minister Netanyahu, I think.
Just on the US and Russia, I mean, amid this sort of disengagement, where does this leave Ukraine? Because this is also being seen as Trump maybe handing a win to Putin.
Yeah, I mean, look, it's very, very hard to see it any other way. I mean, Ukraine, Europe, for all its moral support and efforts to provide weapons, it just doesn't have the firepower that the US has. And, the nature of this war has been very, very ammunition heavy. And you've even seen Russia having to turn to North Korea, which has just massive amounts of ammunition and, all that Soviet-era weaponry that it can draw on. And without the US, Ukraine, the estimate they could last maybe 3 or 4 months there, and Europe can't step in that situation. So in a sense, time is on Russia's side here. And even if they do find some sort of agreement, as as Trump has suggested at various points too, of freezing the conflict, I mean, all that means is that Russia becomes more and more influential in Ukraine's political environment, and Ukraine's sovereignty sort of comes at risk. If Russia doesn't control it completely, at least it can turn it into a client state. So it's really hard to see Ukraine, how Ukraine will sort of function as a sovereign state after this, unless there's some dramatic change there.
The question of functionality going forward and the vision of what Gaza looks like is coming into play again, right? Israel now making clear that they want to take it over entirely. We've had aid cut off for almost 3 months now.
Yeah, well, I mean, look, Israel says that aid is resuming now. They're under a lot of international pressure on that front too. I mean, it's a catastrophic situation in Gaza. And the idea of reoccupying it, obviously the military's been through there already, is that it's not going to be attacks. They're going to be there to try and, root out Hamas, or the remnants of Hamas, which probably they can do, but, they're going to be in among a very hostile population. It's not necessarily that Palestinians support Hamas, but, they've been subject to 20 months of conflict. I mean, it's a horrific situation for the civilians there. So it just seems like this is going to drag on, and that again speaks to why President Trump is sort of, they negotiated directly with Hamas to bring out a US passport holder, a US citizen from among the hostages, which no US administration's ever done, but it sort of speaks to their frustration. And this is what Israel is doing now, is it's going back in there. It already controls about 30% of Gaza, but it's looking to reoccupy it. And some of the elements of Prime Minister Netanyahu's government want to, reimpose settlements there as well. So, it doesn't look like that conflict's going to be resolved anytime soon.
Bloomberg's Michael Heath there. Let's take a look at how futures in Europe are opening up at the moment, of course, in the overnight US session, which is sort of carrying through when it comes to Asia. We did see that reversal of the 1% dip as dip buyers really came back into the fray. But take a look at Euro Stoxx 50 futures. We're up about 0.7%. Some upside when it comes to German DAX futures there as well. The previous session was a pretty flat one there. Earlier losses really kind of to do with Moody's downgrade of US government credit rating, the ongoing trade tensions as well. Pretty good earnings season. At this point in time, we had aviation, Ryanair, for example, which saw a bit of a boost there. European stocks is up over 8% so far this year. That's an outperformance still over the US and still being seen by many as a diversification market that's quite attractive. We also did have some commentary when it comes to what to expect from the ECB as well. The ECB's Governing Council member, Mattis Müller, saying that they need to be cautious when it comes to further easing. There's no clear need to be actively supporting supporting economic growth, but they could consider further rate cuts. More ahead there on the Asia trade. This is Bloomberg. Atlanta Fed President Raphael Bostic is adopting a wait-and-see approach on interest rates. He told us more about the tariff uncertainty influencing policymakers and investors.
The market is trying to process a lot at this point, and where our rates are, I think, are mildly restrictive in the marketplace, trying to get inflation back to our 2% target because it's been too high for too long. I think the rest of it is really about perceptions of risk in the marketplace, and uncertainty and the volatility that might be present in the market, I think leads to there being an extra premium on it. And so the market will decide what its price needs to be, but it doesn't surprise me very much that we see it at a higher level relative to the things that we've done with our rate in the last year.
Well, we've got the downgrade now that pushed rates up early this morning and overnight, and then it started to fade back a bit. The same thing that sort of happened after Fitch and S&P did their downgrades. Does it worry you that they are not pricing in more of credit risk to the United States, given that we're no longer AAA?
Well, you'll have to talk to the raters about sort of how they interpret these things. What I would say is this. So much of our economy is based on faith that we will deliver on the things that we say that we've promised for the future. When you start to see the markets waver a little bit, I think people are asking the question, do we still have that same level of faith? I think the sign that rates have started to come back down and the markets are sort of returning back to a normal stasis suggests that they think there is that likelihood moving forward, and we'll just have to see where it goes. I mean, I always want to make sure I understand what the price of credit and debt is, but the markets will make a determination of that on their own.
Well, if they are higher and stay higher as they are right now, does that affect your calculation of what you have to do?
Well, it depends. One of the things that will be interesting to see is how businesses and consumers respond to the environment. What I'll say is, because of the word that you said at the very beginning, uncertainty, we know that many businesses and many families are really holding tight to see sort of how this all sorts out. And we'll just have to see how the changes in pricing in bond markets and other markets translates into different strategies moving forward. I do think the stasis that we have right now is one reason why I think it's appropriate for us to be waiting on our policy as well. And we'll just have to see how this all plays out. I'm hopeful that as we get through the summer, we start to get more clarity on exactly where things are going to settle out in trade policy and other factors.
Keeping an eye on U.S. Treasuries amid all this. We'll have more on the Asia trade. This is Bloomberg. Keeping tabs on Asia markets and how the selling didn't last for very long. We're back up on the benchmarks across the region with the Nikkei in Japan leading gains, mostly a risk-on day. Haidi.
Let's get some more on one event that we're watching, the trading debut of CATL in Hong Kong after raising $4.6 billion in its secondary listing. The Chinese company is the world's largest maker of EV batteries. Last month, it unveiled a product set to offer a market-leading 520 kilometres of range on just 5 minutes of charge time. CATL commands over 35% share of the global market, supplying domestic and international brands from the likes of Mercedes to Honda to Tesla. Still, China makes up the vast bulk of its sales, with the US and Japan coming in at a very distant second and third. The US Defense Department, of course, has also blacklisted the company over alleged links to the Chinese military. It is an accusation that CATL has denied. Despite that, the firm heads into the secondary listing with a strong cash flow. It intends to use much of the proceeds to fund a planned $7.6 billion expansion in Europe and gain greater exposure outside of China. Let's bring in now for some analysis Eugene Hsiao, who's a head of China Equity Strategy and China Autos at Macquarie Capital. Our very own Yvonne Mann is also joining us again on the ground from the Hong Kong Stock Exchange ahead of this debut. Great to have you both. And Eugene, let me start off with you. We've talked about some of the downsides, and I know that you think that the geopolitics side has been priced in. How much value do you see in this company?
I mean, we still think that CATL is very well positioned overseas right now. As you mentioned, with this IPO, now they really have this new war chest that they can go and build out that capacity overseas. So right now, we do see a lot of upside for them to continue to expand overseas, considering how competitive domestic Chinese markets are.
How smooth do you think or easy will be the challenge of broadening into these overseas markets, given we have spoken about some of the headwinds?
Yeah, it definitely is going to take a little bit of work, not just in terms of building out the actual facilities, but one of the things, of course, is just managing the geopolitical picture. I think you mentioned before, previously CATL was actually had a decent business in the U.S., but with the various policy changes in the U.S., be it the IRA and now, of course, the Trump administration with the tariffs, they've been pulling back from that a bit. Now, when we think about the use of proceeds for this specific deal, for the H-share listing, is really much more targeted towards Europe. And when it comes to Europe, right now, our view here is that there is a degree of possibility that the the EU Commission and the Chinese government is trying to work out some sort of easier way to be able to export things like EVs and build batteries in Europe over time. So that should hopefully ease over time.
Eugene, I got to ask you about overall what this stock means. I mean, we're talking about 8.8 million shares for retail investors, 2/3 of which are going to be held by cornerstone investors. So they're not going to be selling the stock or doing much with it for the next 6 months or so. Do you think liquidity is going to be an issue?
Yeah, I think it's an interesting question because this is not a normal IPO, right? Obviously, the A-share already exists. So in the near term, I do think there's going to be a lot of trading just between the H and the A, and that's pretty common for these sort of transactions. However, I believe longer term, it is still positive for the stock in the sense that being H-share listed brings additional liquidity in the markets, just being a much more easier currency, you could say, for global investors. You know, when you're thinking about buying A-shares, there's always restrictions like going through southbound or through QFII in order to get access. Now, being an H-share, not only do you not have to deal with that, but you also have purchasing in Hong Kong dollars, which is obviously a much easier currency to work with.
It seemed like CATL, from the perspective of foreign investors, as a pure battery play. Is that a good thing, do you think? I mean, obviously, we've seen unit prices have come down a bit as well.
Yeah, that's a great point. I think for CATL, if you really look at their most recent strategy, I think even just earlier this week, they've been trying to look at adjacencies within the battery business. You know, our longer-term view here is as EVs become wider spread, that means batteries get wider spread, and to be honest, they all become a bit commoditized over time. Our view is that CATL is actually quite aware of this, and they're trying to move further downstream into the EV supply chain, doing things like battery swapping for heavy-duty trucks or for passenger vehicles, or building out these vehicle chassis to partners like Chang'an, et cetera. I think you put that all together, it looks like they're trying to increase their network effects and the stickiness of their products. So this is how they're going to manage that transition over the next couple of years.
Where do you see the priority markets as they're looking to expand beyond China, right? We've talked about, obviously, there's some traction in Japan and the US, still pretty far behind. Where do you see kind of the lower hanging fruit when it comes to an international expansion for these guys?
Right. I think clearly the first step is going to be Europe. I mean, they've already put money in the ground in terms of building out their German facility. It's relatively small, only around 14 gigawatt hours. But now with this new capital raise, they're going to build out that Hungary facility, which is, I believe, a plan after 3 phases will be about 100 gigawatt hours. So if you think about their current capacity now, which is close to 700 gigawatt hours, that's a meaningful chunk of that. So you can see that Europe has been the first priority. I think after that, it's really looking at other more geopolitically friendly markets. ASEAN, I think, would be the logical example. There is talk that they're going to be trying to move there, either someplace like Indonesia or somewhere else. But I think that has yet to see really confirmed plans. But I do think that's probably the next step of growth overseas for this company.
Geopolitical and sort of external pressures aside, how do you rate the competition environment within China?
Chinese competition for almost everything is extreme at this moment, I would say. EVs is the clear example here. I mean, we've seen so much competition, so many brands, so many models, and batteries is no exception to that. And I would say that even though BYD and CATL have the vast majority of the battery sales in China, we are seeing some of the second-tier players slowly gain more share over time. I think this is just a matter of the market getting more mature, as well as the rising competition in China.
Eugene, last one before we go. The fact that this secondary listing is happening for CATL, Beijing must have given the green light for this. Is this a sign that maybe the government is maybe warming up its relations with entrepreneurs and the private sector once again? What does this mean for overall the tech sector in China?
Yeah, I think overall it is a positive here. I mean, for the last 3 years, I'm sure you guys are very aware the Hong Kong markets in terms of capital raisings was pretty weak. But over the last, you could say, 3 to 6 months, we have seen a pretty sharp rise in raises, not just CATL, of course, but we saw Xiaomi, we saw BYD, saw plenty of companies look to the Hong Kong market. And overall, I think this does provide a boost of confidence to investors that there is liquidity here, that there are innovative companies that want to be listed in Hong Kong. And I think that will provide investors, as well as even the governments, some feeling that it is worth pushing the capital markets more.
Eugene Hsiao, really great to have you with us as the head of China Equity Strategy and China Autos at Macquarie Capital.
Yeah, and sort of keeping with the tech theme, Nvidia chief Jensen Huang has outlined plans to let customers deploy rival chips in data centers built around his company's technology. The announcement came at the Computex conference in Taiwan, and we go across to Bloomberg's Annabelle Jolas for the latest in Taipei. So, Belle, what's the latest?
Yeah, well, Avril, I think you just mentioned really one of the highlights that came out from the keynotes yesterday. So really, the event kicked off hearing from Jensen Huang, for instance, from Nvidia, also Qualcomm, Honhai, MediaTek, just some of the names yesterday. Today, really, it's the exhibitions that get underway. And I'm here at the conference venue, and I can see there are really hundreds of people that are starting to come through the doors. So we had the Nvidia announcement. Also, what was really interesting to hear yesterday was from the new Intel CEO, Lip-Bu Tan. Now, he's taking the helm at the company at a time when it's facing a lot of challenges. So Intel isn't here in a keynote capacity this year, but certainly the new CEO, Lip-Bu Tan, is saying that he's meeting with lots of different customers and clients and getting their feedback on the products that they're pushing out, really as well emphasizing in an event last night, which I attended, the close relationship that Intel has to place in the Taiwanese ecosystem. So again, something that's a point of difference from the former CEO, Pat Gelsinger, who'd been sort of critical of TSMC's role in the semiconductor supply chain in the past. Also to note, at the event yesterday or after the market closed, we did get an announcement from Honhai. They put in an exchange filing, but essentially they're saying they're dialing up their investment in their India unit at $1.5 billion. And that's notable because we've, of course, heard Apple, their plans to produce all of their iPhones or most of their iPhones that are sold in the US in India within the coming years. And that is against the wishes of President Trump, of course, who's pushing Apple to bring that investment back to the US. But clearly Honhai, the major assembler of iPhone products, is moving ahead with India.
Something else that might be perturbing President Trump is this announcement outside of Computex, reporting that Xiaomi is planning to spend $7 billion to build out its own chips.
Yeah, that's right. And I think, Haidi, to your point, I mean, I don't think it's any coincidence that as what is one of Asia's biggest tech events of the year, Computex kicked off in Taiwan, that China is making these announcements of its own. And so, yes, Xiaomi is going to be investing or has been investing billions of dollars into this effort. They're saying they're ready or nearly ready to unveil their self-designed processor. It's actually going to come later this week, late June, that the founder and chairman speaking to his followers, essentially, but on social media about this. And it really is a big departure for the business because, of course, they've been reliant, like others, on Qualcomm, for instance, MediaTek, but now moving that in-house. Moving actually back to Apple, though, because it is interesting to make that comparison. We've as well seen Apple making this push in the past, bringing their processors back in-house, but now Huawei, Xiaomi, are looking to do the same.
And Belle, I guess in that same vein, we're also hearing about some self-sufficiency efforts from the likes of Huawei.
Yeah, so this is actually more on the software side. So Huawei, we know it's very, very strong in hardware, but now they're actually shifting their software offering instead. So they've actually just debuted their first in-house operating system for PCs. So this is Harmony, which we already see as sort of the replacement for the Android operating system in its smartphones. Now they're saying, okay, we're going to move that and make it available for PCs as well. So it's going to be running on the MateBook, or rather the MateBook Fold. That's its latest foldable laptop, but a shift away from the Microsoft Windows operating system. And again, Huawei starting to move more of those software systems in-house and compete against the likes of Microsoft from the US.
Bloomberg's Annabelle Drew is there. And staying on Huawei, China's accusing Washington of undermining recent trade talks, with its warning that using Huawei's AI chips anywhere in the world would violate US export controls. The Commerce Department had issued the statement last week, while the US has since toned down that language, stripping away the anywhere in the world reference. It hasn't managed to appease Beijing, Avril.
Yeah, and we're also tracking some other developments on the corporate front. Hong Kong issuer FWD has filed a fresh application for an IPO in the city as share sales pick up again. The firm is reportedly seeking to raise several $100 million from a listing this year. FWD is backed by billionaire Richard Lee and had dropped previous attempts for much bigger listings in both Hong Kong and New York as far back as 2021. Trip.com has reported first quarter adjusted earnings per American depository receipts that beat estimates. Revenue came in at 13.8 billion yuan, while gross profit was around 11 billion yuan. Executive Chairman James Liang says the industry maintained strong momentum in the first quarter of the year, supported by consumer demand and favorable travel policies. UBS is said to be set for defeat in its first efforts to water down a Swiss law raising its capital demands. Sources say the proposed bill would force the lender to boost its ability to cover losses at foreign units to 100% of its capital. This would mean as much as $25 billion in extra capital. UBS is pushing against the new rule, arguing it would be a major disadvantage. More ahead on the Asia trade. This is Bloomberg.
And of course, we are counting down to the RBA decision today. This is where markets at the moment are pricing in at 3 RBA cuts by year end. We are expecting what is being characterised as potentially a bit of a hawkish or protective easing measure at today's meeting. Let's bring in Micaela Fuchila, who's the chief economist at Jarden. Micaela, really great to have you with us. And so, you know, as always, it seems there are reasons on both sides in terms of whether the RBA should move or not. What's the more compelling argument today?
Oh, I think regardless of the volatility in global markets and global economics in general, the RBA was already with an easing bias in place, waiting for inflation to reach target. We have seen inflation reaching target at the underlying level already, so they will be welcoming that development as long as we don't see those upside risks on the inflation front. We also have a labour market that's quite solid, with employment growth in line with what they were expecting, and the unemployment rate largely at a level that has been really, really low. In addition to that, I guess the downside for them is the consumer. Consumer spending has been quite weak into quarter one, and the strength that we've seen late last year hasn't been sustained. So the balance of risk is a little bit more on the downside risk to growth in our view.
The risks or the opportunities arising from trade is always an interesting one, right? Because first of all, it is just the pause that we have. You know, things I guess could continue to go south. But also, was the risk bigger when it comes to inflation, or was the risk bigger when it comes to a slowdown in growth via the proxy through China?
Yeah, so I guess the RBA will have to take into account any policy response from China initially. If there is any hint or any idea that China will go and stimulate the domestic market, that's potentially an upside to growth for Australia. On the other hand, if we continue to see uncertainty dragging along, we already have 90-day pauses, another quarter where businesses and consumers don't really know what's going to happen, and they really tend to wait and see. We have seen that in the NAB surveys, showing a little bit of weakness in terms of of capital expenditure plans and things like that. So I guess overall will be the uncertainty is dragging growth potentially softer, and inflation, we really don't know the impact yet because Australia hasn't had major tariffs put in place, only at 10%. And in addition to that, we know that any overcapacity from China could be coming into Australia, which could be seen as a downside risk to CPI as well.
Micaela, what are you expecting in terms of the governor sort of threading the needle and tamping down the market's expectations of future rate cuts from the RBA for the rest of this year?
Yeah, so the market pricing has been all over the place since the last meeting. We had periods of time where we saw 50 basis points pricing for this meeting. Now, if we look at the data, that seems really unlikely. So the communication will be really important. We don't think it's going to be a very hawkish message. I think the governor will try to balance and focus on the risk to the outlook, perhaps. So in our view, they will deliver a 25 basis points cut today, and they will talk about what the trading partners' growth looks like as well as global growth. Those are things that will probably sound a little bit more on the dovish side. But in saying that the domestic data remains quite strong, we have seen wages perhaps a little bit stronger than what the RBA wants it to be. So the combinations of those two will be the RBA will deliver a cut and will flag that more cuts will come as needed. Remember, this is a full review of the forecast as well, where global growth will look a little bit weaker than they expected initially. But in saying that, the data domestically has been relatively okay. So a cut with a more neutral stance and perhaps highlighting the downside risk to growth in the near term.
Micaela, I think where things are maybe not where the RBA wants it to be is in productivity. Are we expecting further reforms from the government?
Look, I guess from an RBA perspective, they really can't do much about that. It's more a government problem and focus. We do look a lot into the GDP accounts that show that productivity growth remains really weak, and that means wages are more likely to surprise to the upside than the downside. In terms of reform, that is more a fiscal issue. And what we're seeing after this election is, regardless of any of the parties, the outcome has been a clear path and more policy or more support, political support for the party that is in place, the Labour, to continue to push reforms. What that looks like in terms of productivity gains is very unclear just yet.
In fact, the Productivity Commission has targeted 15 priority reforms. As they point out, productivity is at a 60-year low for Australia. What do you think should be the main priorities, and what's actually going to be effective in improving productivity?
It's a great question. I guess in the near term, and what we can do for now is try to address those sectors that are highly productive. One of those is the mining sector. We have seen weakness throughout that one for a long time. I mean, not for a long time, but for over the last few years. Weaker currency would support an increase in productivity growth in the near term. In terms of addressing further productivity growth, perhaps the health sector will be the top priority, as it's been a main focus for this government.
Micaela, really great to have you with us. Micaela Fuchila, who's the Chief Economist at Jarden. And subscribers can also turn to the terminal for more on the rate decision from the RBA today. TL Go is your function for those updates, commentary and analysis from our expert editors as we await that call, expectations for a rate cut today. We have more on Australia Ahead every Tuesday at 10:40 a.m. If you're watching here in Sydney, that's 8:40 in the morning out of Hong Kong. Plus, you can tune into the Bloomberg Australia podcast too. We delve into the biggest stories shaping the country's role in global business. You can find that on Apple, Spotify or Bloomberg.com. More ahead on the Asia trade. This is Bloomberg. And of course, Avril, looking ahead to the excitement when it comes to the CATL debut, secondary offering, but still so much insight in terms of a demand for a key sector. This is, of course, China's 11th largest company as it is. And we are also seeing that pickup when it comes to broader debut and deal activity for Hong Kong. CATL raising $4.6 billion last week, really kind of shrugging off market concerns over these geopolitical tensions, the Pentagon blacklisting, US congressional scrutiny as well. And we've got Jiangsu Hong Hengrui Pharmaceuticals is next in line. They're seeking up to $1.3 billion. So the question really is, Avril, is this the renaissance, right? The return of listing and deals activity in Hong Kong after what has been such a period of drought?
Yeah, and we're seeing how, in terms of if CATL actually exercises an option to increase, we could see it single-handedly doubling Hong Kong's proceeds from listings this year. So quite something to keep in mind. But of course, amid all this, we're hearing from analysts, right? The idea that CATL shares have room to rise. I think Jefferies expects it to rise 50%, driven by strong earnings, by attractive valuations. But the bigger question in the background is also how we could see potentially broader market moves in Hong Kong stocks, given how portfolios need to be adjusted to sort of make way for this listing, this stock, Haidi.
Some really interesting sort of points that we had earlier when we were speaking to Eugene Hsiao about this listing. In sort of their house view, they're looking at the fact that some of the geopolitical concerns may have already been priced in by investors. They really see a lot of value in terms of where they can go internationally beyond, obviously, their primary market of China. They've got sort of secondary markets that are quite far behind their primary market in the US and Japan. But they are the largest maker of EV batteries. We have seen so much enthusiasm there, and the company is not really expecting a lot of impact when it comes to the risk of US tariffs. The European market is really going to be one that's going to be front and center when it comes to where this funding will be used to fuel that ex-China growth. That $7.6 billion overseas expansion in Europe is where a lot of that funding is headed. So watching out for that debut in Hong Kong today. That's it for the Asia Trade. The China Show is next.